that when it comes to market pulse concept, this one is coming with the actual support and resistance. It's different than the actual trend catcher support and resistance. When you combine them two together, you remember what I said before, the zones that are mostly highlighted are stronger in that perspective. And I'm not talking about the 5 minute, I'm talking about if you actually go to the higher time frame, because you obviously, if you base your trading on the lower time frame, that would not work. So in this case, this level is high. Right, for Bitcoin, this level is high. That 40,200, 300 held off for how many times, right? This finally broke the camel and landed here. So that's the reason why I'm saying that right there is heavy, and this is heavy. That 49 is heavy. This 43.5 is heavy support when the two combined highlighted, and this level is also heavy. This is minor. That's when you join them together, become that superb, right? So that's pretty much what it meant from support resistance level perspective. Let's talk about order block. Just make it really transparent. Order blocks are not meant to be trading live, meaning that you just can't wait for order block pop and start trading. You need time to calculate, you need time to formulate, and it's kind of like one of those lagging type of indicators, but it's not lagging in a way where it's repaint, right? It's lagging because it takes time to calculate certain information. Well, in our order block perspective, the information we're looking at consists of two things. One is the actual buy and sell pressure right here, and then another one is actual total volume that order blocks for the entire order. It's calculating how much is it. Those numbers aren't going to be relevant enough for you guys to be in terms of basic trading, but it's good to know in terms of that volume. The idea behind this strategy is pretty simple. Let me explain. So Bitcoin. So often, it take about 2 to 3 bar for it to close. So 4 hours, you understand 1, 2, 3, 4. So by the time it populate this one. So when I saw this one, Bitcoin specifically, when it is around this price, around 41.4, 41.5, going on a Sunday, when we opened that Sundays or something like that, I saw this order block was forming like this. It was forming and starting to formulate. If you look at the order blocks and when it starts forming, it doesn't just automatically pop up the whole entire order block. It takes time and those number changes. So it means it's calculating slowly. It started like this and it's slowly moving itself out to the final numbers. And that's when it doesn't matter. The point is when it formulates and order blocks, and once that order blocks confirm, meaning that, let's say example, on this 4 hours at 12 o'clock p.m. it's starting to form. Obviously, the next bar is at 4 p.m. So let's say once the closing of the next bar, right, and this order block is forming on top and it's confirmed, that's pretty much letting you know that a decent size drop, the actual confirmation order block form right here, is letting you know right about now that the selling pressure has confirmed, at least on this particular area when it's formed. So every time an order block forms on the tops, at least on the higher time frame. So the idea behind the strategy is the lower time frame, same thing. Trust me, if you look at it, you will see it. Lower time frame to move a little bit less. Higher time frame, like 4 hours and above, if you see it days from now, a couple of days from now, week from now, that number is going to, dump or pump in that perspective. So we saw this on a Sunday, and then, 1 or 2 days later, which is today, Tuesday, we had massive dump all the way to here. It's confirmation, same thing here, massive dump to here. You get my point here. Look at how massive that is. When you're looking at this indicator, what you see right here, this is an uptrend, right? If I see this uptrend, that first formulation of that indicator right there in the order block on the 4 hours, which is right here, that first around 2040, 2050 area right here, somewhere 1, 2, 3, 4 bar closing, mark the first ever change in direction for gold, right? That's the first change. Is one up, first direction. Now that's how I view it from that perspective. When I see that, and as long I don't see anything that is populating down here when the price is going down and it's starting to formulate more order blocks on top, that is a continuation of that particular trend. So that's the reason why right now, even though gold is in an uptrend, obviously, but it's formulating a potential downtrend right now, looking at it, until it's starting to formulate the first order blocks, right? So that's pretty much the trend aspects. So you can see I can go through different time frames, what happened to the actual trend using order blocks. Now, the trend aspect, you have to understand that from a time frame, you have to take in consideration how long it will take. Looking at the daily using order block, I'm looking at from a perspective, from a macro perspective, way macro. Like I'm talking about like the super macro, like what's going to happen down the road. Could be a couple of weeks, could be a month, could be more than 1 month. What's going to happen? So you can see right here, the first order block forming around right here, this range is kind of tying with the actual 4 hours, and let me know right now that I have a potential. There's high potential of hitting that number, right? Because of the actual market trend. So that is pretty much looking at it. So like the clear view about this, I could just pick anything. Let me pick some random one right now, right? Is that you don't have to be a professional trader to understand trend. When it comes to trading, trending analysis is key to everything, right? It's key because if you don't understand what kind of macro trend you're in, whatever you're trading a lower time frame is irrelevant. It could be 2-second bullish and 2-second bearish, doesn't matter. So if I'm going through right now, right, I'm looking at this USD JPY, for example, you see right now, USD JPY, formulate what you don't have to be a genius. Just look at this. Like, what do you see here? Like all I'm saying, you look at the 4 hours, you just open up USD JPY and you just look at the screen. Well, USD JPY, uptrend. As simple as that. It's nothing less, nothing more. But the one time you see it formulate on top, from a macro perspective, what's going to happen? You are breaking, or at least trying to break this uptrend. Now it's showing you this first clue, right? This first clue that the market is looking to change on USD JPY from a downtrend, from an uptrend to a downtrend. I'm not saying it's going to break the structure. I'm just saying that it's looking to change that momentum switch. So if this were to be an upside, right? That's an upside. This is a first clue that this upside might have a pause right now, and we're looking to retrace. The difference between these type of massive retracement versus type of small one, I mean, these are still decent retracement, right? It's pretty beast in there, it's pretty big. But I'm talking about a macro perspective, like real retracement. That first order block form on top, that lets you know you are in trouble. If you're longing anywhere here, it's time for you to start looking for other direction, or at least hedge your thing. Now, here's the next part of the order blocks. So if you understand that order blocks comes in this particular, or this market pulse in this particular range, right? So this is your range uptrend. This is your first clue. I'm sorry, if I go back real quick. This is your first clue that the order block is looking to retrace. As long as the actual price action does not break this order block, this entire structure is valid from an uptrend. Hope that makes sense. Right, from this particular market pulse concept. As long as this level is not violated and it's not broken, once it's broken, you know it's pretty easy to close below it or near it. This thing removed, yeah, that level is broken, right? It's broken in that perspective. So technically it's not broken, right? So it's still an uptrend. We have a retracement, and guess what happened? The first order block forming again from the opposite trend. So before it's up, now it's down, now it's showing the bottom. Now the price is looking to continuate this particular trend that we're in right about now. You see how nice that looks? So in order for us to really confirm this USD JPY is moving to the moon, or at least to the previous high, we need to formulate the actual order block on or below. We don't want to see any order block form on tops, because if there's order block form on tops, more retracement, right? Continuation retracement until these levels are broken. So that's how I look at it from a trend perspective. You can actually use this with the actual strategy. So like I said before, you can actually go through any pairs. You don't have to just look at the high time, let's say US 30, right? Don't have to be a genius. Just know, right? Just know one thing, right there. When the price get down to about 37,132, a couple more bar later. So let me zoom in real quick. A couple more bars. Let's say 3-4 bars, right? 1, 2, 3. Around 37,441. You see this thing starting to formulate and form. All I'm saying is that I'm not saying this thing is going to go down, go up, so 100% guarantee on you on that. But at least one fact: this level right here is going back up. It's a lot higher in terms of confirmation. That is right. So that's how you're looking to understand that, you know, structurally we can have this up and down in the lower time frame, but macro structure from US 30, we are heading up from that structure, right? Until we see a formulates order blocks on top, we're not going down in that perspective. So that's how you identify the actual trend using this particular market pulse concept. When actually looking at and analyzing the whole entire chart is very simple picture. Just look at the 4 hour today, just pop it up. What do you see? I see a uptrend. I don't see no first signs of order block forms on top. That means we're not looking some full retracement. That doesn't mean that we'll retrace in a shorter time frame. From a macro perspective, we're not having any crazy move that I need to be aware of. When it comes to Bitcoins or any particular trading pair you're looking at, using the three idea together. First of all, you have the trend catcher, and you have the actual market pulse concept, and you have the sniper X1. So if you notice, and if you are trading Bitcoin, you should have seen this order block format on top right here. That's the first one, right? The first one, that's why price is trying to hit that heavy rejection, but this was the big one. This was on the actual Sunday at 4 p.m., which is before the market fully opens, around 41.33.40. I saw this order block form on the actual 1 hours. That forming of the 1 hour let you know that directional, that is, right? Directional, that direction. How far, I wouldn't know. That's not the purpose of this indicator. Like, oh, it can predict you like 2,000 on a move, but it predict you exactly the direction the ball want to play on. 1 hour is an intraday time frame. That doesn't mean I'm going to start flipping, but the 1 hour is mean if I'm trading the same day today, I'm looking at the 1 hour for my initial support, right? So this is my 4 hours. Let me turn back this trend catcher real quick. So next thing I'm looking at is, and this kind of feature is really, biased, right? It's up to you. I use VWAP. This dynamic VWAP is like this governing area for me. Is my savior all the time. Is that the price action, the moment you break it, right? If you haven't break above it, that kind of certify me that you're not going anywhere. So when a VWAP is sitting near an actual resistance or an actual support, that level becomes super strong for me, right? That means that price level, whatever that is, the VWAP, this one, my key level zone for me, as long as, here's the confirmation, the final confirmation, as long as my sniper X1 doesn't show massive green, I'm talking like this massive ribbons, not this faded ribbon, this massive ribbon. This isn't the ribbon I'm looking for, right? This is a weak ribbon. So if I could zoom in real quick, if you want to be 100% confirmation without going, too early into your strategy, you see this fadedness right here and this confirmation right there, 42.847. Look at this fadedness in this actual, if I can zoom in a little bit more, this fadedness. That means, what is that telling you right now? At this level, I see the curve, I see the weakness in the actual momentum. I'm sitting right at the resistance with my VWAP supporting that resistance at about 43.217, 43.500. So it's about $200 gaps. That level for me, at least, I'm not longing, that's for sure. 100,000% sure I'm not long on that level, and I'm looking to snipe that level from that entry. There's no right or wrong, right? It's not about right or wrong. This entry is about me taking a shot at the confirmation, and then right here, right? I'm trying to take my previous high as my next, what I call the next stop loss, and then from there I will target the next resistance levels. Or if I could go gung-ho like this, I could set far, but the point is I'm targeting the next resistance and looking how this momentum looks. That's the 3 confirmation I'm talking about, right? So the idea in a short time frame, the first thing I would do is look at the 4 hours, even the daily if you really want to understand 3 things and 3 things only. One is my trend using order blocks. How's the trend looking right now from this perspective? Well, downtrend, got it. So at least I know the downtrend. Second thing I'm looking for is, where's my range? My range right now is 41.725. My max range bottom support, if that breaks, obviously we're going away from that range, is 40,003, 40,005. It was originally 40,005. So it's right here. So at least I understand my range. So I'm a lot more close to my resistance than I'm at my support. So it'd be kind of foolish for me to take it long. And you can see how it also confluenced the 4 hours and the 1 hour. Look, the 41.7, 41.6, and then 41.7 is the next resistance level. So if I draw the line right now, this is the resistance, and this is technically the actual VWAP, which is kind of like resistant in some sense. So I go down to the actual 1 hour. See, I have my resistance right here. I have my VWAP. It's lining up beautifully, both the 1 hour and 4 hours. That is what I call the ultimate confirmation that this level is massive, right? Massive on a traditional trading days, not news day. News day wouldn't matter because that kind of stuff. So when this happened, I understand my range. I'm a lot more resistant levels and a lot closer to, I'm not closer to my support. So taking my short entry trade up here, it's not about right or wrong. I could be wrong, I could be right, but the point is I'd be willing to take my trades at confirmation level. Order blocks serve, right? It's an area opportunity where the indicator is telling you this area right here is where potential buyers and seller will react to it, right? People will react to this price range. Not too much here, but it's gonna be a lot here. So if I were to look at this price action and knowing myself, there's nothing right here, I just can't randomly place right here, I'm willing to take a shot based on momentum, of course, changing, but around this area. If that area doesn't hold, I'm looking at this next area, 36.6 to 35.774. That's what order block is serving for. See the high time frame? The high time frame is showing you actual order block. So if you want to go further, which is the daily, right? The daily take more time to play out. If price continue want to push it further, this first level we need to hit is 37.8, which is very reasonable, and the bottom range is 35.663. That's the first order block. If we continue to push further, that area will get reaction for a price action, right? That's the daily time frame. That's how I view it. And the same thing, 4 hours. If that level breaks, guess where it's going to land at? Close to that daily order blocks. See that? So it's kind of matching that. So basic order block is telling you a couple things. First thing is the trend. You just need to pop in your chart, look at the actual chart using high time frame, tell exactly uptrend, downtrend, sideways, whatever it is like that, very fast. The second thing is that order blocks are used as key level where you're going to see potential reactions. So for me, when I'm trading, I have order blocks that's formulating. I have order blocks that's formulated. It doesn't matter where that order block is formulated, right? The key is it's formulating. This doesn't count because it's actually the news, whatever it is. You can try to attempt to hit it. You can try to attempt to hit it in a shorter time frame. You might get an attempt to hit it. So you will see this more and more and more on the actual lower time frame. See that reaction, bounce, right? I'm not saying the lower time frame is irrelevant because the bounce in that perspective. So the actual order blocks, what the actual support resistance level, that level is key. So the lower time frame is not, do not base too much on it, but the point is that it's key, right? It's key. So it's the same thing apply. So in theory, the same thing apply for short time frame and higher time frame. You look at the actual trends of the actual right here, whatever this price is, that's a downtrend, right? The first order block form on the lower time frame, right here around the 38.7, 38.6, whatever this price is right there, that signifying to you from this whole entire drop down here, this area is this zone right here is where we're looking to take a bounce. Right, that's what is the first order block is telling you. A second order block form is where we're looking for continuates. We haven't changed any direction from a downtrend, uptrend. And then you see the first order block forms on the actual 5 minutes, again on the short time frames. If you add it in with the actual, right, Sniper X1, that level right there, it seemed to have rejection. A rejection for a continuing of this direction. So if you are targeting this area for a short, this next area be for a exit, or at least a scaling or major scaling, unless you see anything crazy. But just know one thing, and if you watch it enough, you will see it, that sometime when you look at the price, whether you're trading gold or not, you will see it, is that when the price action is starting to hover itself, let me zoom it in. When it hovers itself like 1, 2, 3, 4 bars, and you start seeing the order block starting to formulate, right? It's starting to formulate right there, and then 1, 2, 3, 4, and the price is wicking into whatever. I would say more than 70% of the time, I'm not saying 100%, 70+% of the time, price can wick into it, but it just lets you know that early warning sign that the price is looking to go up there. If it's already continuation, there's continuation. If it's the first time it's populating the signal, this thing is going back up. So I use this specifically on the 30-second. It's crazy, but I do use it on the 30-second time frame. Which is kind of ridiculous. So in theory right now, this is a shorter time frame showing me the actual downtrend, right, in this particular order blocks. Hasn't formulated anything for me on the bottom. So while I can do some scalping, but I'm not really, going crazy gung-ho about this move because I haven't seen any formulate some order block on the bottom. Sorry, so you can see right here in my point, let me get down. Same thing, see it? It went down, did not formulate order block, went back up, went back down. It did not formulate. That does not, it is showing that it does not formulate an actual true order blocks in that specific area. That means this entire price action has a tendency, if there's no order block forming, you still have a pump, but have a tendency to go right back down, right? But once it's confirmed on the lower time frame, even the higher time frame, whatever it's at, right? So imagine up here, order block form. It already took that out. That's the reason why there's no order block. But the first order block form on the bottom, from an actual tops, you see how far we went up, and the price went back down, right? You formulate another order block continuation, right? And then the first order block form on tops, going back down. Now you have this downtrend. You see how the lower time frame and the higher time frame is different? Lower time frame is almost like you paint new picture every time the trend. This is a uptrend, right? Continue order blocks going back up, and then you have the first signal. That's a downtrend. Well, downtrend continuation, short and down. It's the same application throughout your entire history. So if you just taking a short view, just know one thing is that doesn't matter how you use the particular strategy, it tell you the exact same pictures on all time frames and all markets. The only difference is that the time frame that you're using, small or big, will vary in terms of confirmation, true confirmation, and how far that move might be.